Hey everybody, Courtney Smith here with our Wall Street winners for January 18th, 2021. Yes, in our 25th year. We started this way back in actually 1995, so it might even be our 26th year. Who knows? But anyway, that's a long time. And it's a long time to be right in the markets. But hey, I like being right. And of course, this is right every single week. Okay, let's get right into this. The market dipped late last week. Now, if you remember, our basic scenario was we expected some type of a dip in early January. And we got a little staggering there in the first week, but then we went back up. But now we're staggering a little bit. But this will just be a small dip in the market. This is not the beginning of a bear market. Now, I am developing my scenario for the coming year, and I may be doing a webinar where I'll talk about what my outlook is for the coming year. But this is not going to be that great of a year, but it may not be. We may get another bear market. And so I'm trying to figure out exactly what the timing is on that. But I'll let you know if we're doing the webinar or not. Dow Jones, you can see that the green line, which is buying pressure, and the red line, which is selling pressure, kind of coincided. Still more buying than selling, but nonetheless in a step in the right direction. NASDAQ also under pressure, no difference. All three indexes were roughly the same this week. Seasonality remains very bullish. And really, the red line in the stock one up at the top, that's my line where I would turn bearish. I shouldn't say bearish, where I would turn neutral. But what I'm going to do is I'm going to kind of probably in a week or two run that up to around 190. So that would be a pretty big increase in my indicator. Utilities, they're just going to be neutral here. Between October 31st and May 1st, they're neutral. And so we're just going to keep them on that signal. Now, seasonality, the two lines we're supposed to be looking at the most are the bottom two lines, the purple line and the red line. And you can see there's that dip, which didn't really dip much in the first 2 weeks of January, and now we've rallied. The seasonality says we should rally over the coming couple of weeks. So I'm really not thinking that we're going to get much of a dip here. Now look at February. February into March is another danger zone for the market. Then after March, things get much better after that. But so look for maybe a little dip early in the week, continuation of what we had, probably close the week out strong, but we got to worry in February. February looks like a poor month for us. We might see a 5% decline in the market, something like that. That'll get everybody all excited. But of course that means because we won't get excited, we'll be cool, calm, collected, that we'll be able to scoop up a lot of bargains during that period. So I'm kind of looking forward to it. We'll take profits on our current positions before then. Okay, asset allocation. Some of these indicators just retraced a little bit of what they did last week. So we had the big increase in asset allocation last week, a little smidge of a decline this week. Risk indicator, big increase in the risk indicator, a smidge of a retracement this week. Global shares followed really the U.S. shares, so I think we're back in sync now. Yield curve, big rally before, a smidge of a retracement this week. Bonds had collapsed the week before, and we got a smidge of a climb this week. I don't think any of these mean anything. I think these are all just normal retracements in normal markets. Bond key factors remain saying that we're going to have higher interest rates, so we have to keep being bearish on the bonds. Dollar, interesting. I told you ahead of time that we were going to see a rally in the dollar. I told you that. I predicted that, and I showed you why. I showed you the momentum divergence, and it's worked. Okay. Now, the momentum divergence is not important anymore. But the fact is, we closed on the high of the day on Friday, which was slightly above the high we had made a week before. So it looks to me like the dollar is going to continue to move on the upside, which is shocking everybody. The world was all set up for a weak dollar. And so we're going to see a lot of short covering here. So look for the dollar to rebound even more sharply in the coming 2 weeks. Now that's bearish for gold. And you can see that the recent price action is almost a mirror image of the dollar, which it usually is. So look for gold to go down. I don't want to short it, but I'm not long either. I own one gold stock. Fully paid up members know about that stock. And it's not going down, which is one reason why I own it. Okay, our gold key indicators are kind of a mixed bag here. So to me, it's interesting that they're a mixed bag. But the most important ones are the dollar and our special indicator that we show to fully paid up members. Those are our two best indicators, but these are three good ones. But generally speaking, the indicators are bearish for gold. Crude oil came under pressure on Friday, and I think we're going to probably retrace back. I felt that getting up here into the 50s was too high. We had the shocker of the Saudi announcement, so that got us up here. But now I think we're going to retrace back to about 49, let's say, over the next week or two. All right, Bitcoin also now struggling at these high levels. So I'm not as bullish, obviously, but the purple predictor says that the smart money's still buying Bitcoin. So we have to remain on the bull side here, looking for new highs. The parabolic rise that we had in the months before, that could have been a speculative blow-off, but the volume didn't confirm that. The price action was definitely speculative. But a speculative blow-off is a specific top formation, and we don't have that top formation here. We've got a continuation formation going on right now. So it comes down hard, it rallies back up, fails to make a new high, comes down. It's a pennant formation right now, a pennant. It looks like a pennant. But the purple predictor remains bullish, making new all-time highs, which tells me we're going to break out of the top side of Bitcoin. All right, freebies, thanks having you here. Not the most exciting week, but just continuation of what we've been doing. So that's good. Fully paid up members, hang on just 1 second. And of course, freebies, what's wrong with you? Come on, sign up.